What's going on, guys? JR. I'm going to review a trade we just took earlier today. USDCAD 15-minute chart. What piqued our interest first is a harmonic price pattern. A bearish crash showed up. So once we saw that pattern, we began to hit our analysis. We began to go through our checklist, look at what we look for to determine if this is a good opportunity, because as you know, just because a pattern shows up doesn't mean we take the trade. That way we increase our winning percentage that way. So what we did is we looked if price was in a high liquidity area, and high liquidity point is what I call them. This is based off of past price action, very high accuracy. And remember, smart money needs areas of high liquidity to employ their business model to be able to accumulate or distribute their contracts depending on what they're doing for that day. So with that said, once we had our price pattern show up, we had our PRZ here in this zone. The PRC didn't get broken, but I didn't take the trade in this area because we had news coming in later that day. And usually what would happen is that they'll use the news to push the market. It didn't happen today, but again, I was aware that there was high impact news for both the Canadian dollar and the United States dollar, so I didn't jump the gun on this trade. So I'm looking at it, the price began to drop. You know, again, you could have took this trade and you could have been out rather quickly. And you probably would have hit your 318 take profit level fast, or 382. Sorry. Yep, you would have hit your 38.2 in 45 minutes or so, an hour or so, and you would have been out of that trade for that day. However, again, we didn't get into that trade because of the anticipation that something would happen with the news. So anyway, we began to see divergence. If you can see that light green line there and this light green line here, there was divergence there. Indicators showing lower closes, but prices closing higher. That's starting to show us that smart money is positioning themselves for a short. Their bias is bearish at this point. Again, that's not confirmed, but that's what we're beginning to get the idea of. So, with the price being at a high liquidity point, I just waited for our pullback as usual. I thought it would have happened over here somewhere when news came in. It didn't. It happened beforehand. And again, I don't wait for the news to take a trade. I'm not scared to trade when news is coming. News to us is simply just something that's going to propel the market or slow it down. It's either going to make what's going to happen anyways happen faster, or it's going to slow it down and make it happen slower. It's going to take longer. That's how I look at news. Because news is just used, it's another tool that the smart money, the market makers, whatever you want to call them, uses. So anyway, we had our pullback. And in this zone, again, one more note is that we had a high form here that was broken with the next bar, that was broken with the next bar. That's another reason why we didn't take that trade, because what was happening is higher lows and higher highs were forming. And again, that's something that we don't want to see. That's a turnoff for us, at least. So anyway, we had a high liquidity point at 147. So right about here, I'll draw a line. 14, right about there. That was where our high liquidity point is. I'll look that green. So we are anticipating some kind of smart money activity, somewhere around this level. So what happens is we went for our pullback. We made a new high again here, which was broken again here. And then we pulled back and we began to make higher or lower lows and lower highs. So now we're looking for an entry at this point. We're looking for a no demand candle, another pullback, something that lets us get into a good position, because now we're seeing that smart money has established themselves. They created the high, and now they're starting to make higher highs, or lower highs, as you can see, and lower lows, as you can see. This candle here shot up, and we got in on the way back down. Again, because look, it did not break the high it made. Smart money is definitely involved at this point. And we got in where this red line is at, as it was coming down. So, 149, around that level. And again, we just took off down from that point on. And then simply, if you look and you do the math, we got in here. Let's go ahead and draw our fib levels in so we can visualize where we took our profit at, or where we set our take profit level at. We didn't even take profit, it was an automatically filled order. So here, where I drew this blue line about, is where we took our take profit at our 618 level. Typically, we'll use a 618 or a 382, sorry, one of those two to determine a take profit 1 or take profit 2, depending on how we took that trade for that day. So again, that was a quick 53 pip gain, depending on how you took the lots. I mean, you could have took a standard lot, made 10 bucks a pip, and you would have made $530 within, you see our entry was here, 15, 30, 45, an hour and 15 minutes, you would have been out that trade, your take profit order would have kicked in, and your trade would have been closed at $530, give or take, depending on commissions, whatever broker you're using, etc. Of an equity gain, $530 if you took one standard lot. If you took two standard lots, you're looking at $20 a pip. At 53 pips, you just made $1,000 in less than 2 hours. A little over 1 hour. Let's just keep it at that. But again, even if you're conservative, you could have took let's say you took 10,000 units. That's $1 a pip. You would have made $53. You know, it's not hard stuff, but it all depends on your account size. I don't get into mine because again, it's personal and you don't need to know that in my opinion. The results, that's all you need to see. So anyway, that was our trade. Our trade day is pretty much done for the day. We saw our divergence kick in here as well. That's another thing that took us into this trade here in this entry. You can see the stochastic is closing lower, price is still rising. That's divergence. Divergence is present, and again, it's just another signal for us that adds up into this confluence of signals that will propel us to take the trade. So again, one more thing, our stop loss, of course, was a couple pips above the newly formed high of the day. Just to cover your butt, again, cover your ass. So anyway, so this is our USDCAD trade. Here's a bigger picture for you. 53 pips. If you can get 50 pips out the market every day, you will be successful. It's that simple. You guys have a good day, good week, good month, good year. Happy New Year, guys. Stay on. See you later.